Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer, Brian Johnson. And we are entering a new week of trading. I think I picked up a spring cold over the weekend, so if I have to cough a couple times, please excuse me. Well, we are entering a new week of trading. It's options expiration week, typically a volatile week in the markets. That does not mean we'll get volatility every single day, but do not be surprised if you wake up to 10-point gaps one direction, only to see that a day or two later it's a 10-point gap the other direction. It seems to happen quite a bit during these times as people get rid of and enter new options positions. We'll be watching this very closely. Why? As you can see here on the 60-minute, look how we have now broken above this line. This is a new line I drew in. I had to back up to get this line, but I love it. I really like this line. So the bulls are up and above this area here. However, they are not moving up at any real precipitous rate based on just the price action that we're seeing here. So bulls have a lot of work to do. Where's the work? The work is really above 10,375. Now, more aggressive traders can try for one above about 10,325, but I personally would want to wait that extra 50 points in the Dow to make sure that we clear this 200 period moving average. Keeping in mind this is a 60-minute chart, so every hour this moving average will be moving to the downside. You want to be very careful trading in here to the long side, and keep in mind that at this point it is a counter trend move, so be very, very cautious in the bigger picture. If you take a look at the daily, you can see we're right back up to this big blue line that I've been watching, and 10,375 not only gets us up over the 200 on the 60-minute, it gets us up over the 200 period moving average on the daily. Very important. This is held extremely well as overhead resistance, and there's no reason to think that it won't hold again on a push to the upside. It might even take a gap up to beat this 200, but regardless, the bulls have some work to do. Once we're over this 200, now maybe we can start discussing some shorter term long positions in the indices, especially the Dow. Maybe back to the 10,600 mark. Keep these areas in mind, and remember, even though we had a good push up on Friday at the end of the day, we only got back up to an overhead resistance area, so we must be cautious. Some of the other indices now have shown strength by breaking through some of these areas, but until they've all made it through, we don't have confirmation on all indices. And the NASDAQ on a 60-minute, also pushing its way up towards this blue line. Notice that the Dow broke above this blue line where the NASDAQ has not. It has been surprisingly weaker than the other indices. Not usual for the NASDAQ. So something's going on, something that we must pay attention to. But the same scenario here, above the blue line and above the 200 are your better spots to start looking for entries. 1880 has always been a spot on my chart for the NASDAQ, or at least the NDX that I've been watching. So above 1880 might give you an opportunity at some at a shorter term long play, but you're going to want to watch 1900. That's the bigger level to get up and above. Daily, the NASDAQ is at, on, or whatever. I can make this line ever so slightly up or down. We'll call it at this blue line, similar to what we're seeing on the Dow. So be careful, especially if we see some sort of a big gap down come Monday morning. If it's a gap down of 2 or 3 points, that's not major at all. It's not anything to be concerned about if you're trying to get bullish on this market. However, if you're trying to get bullish on this market, let me just remind you that anything we see for the time being is a counter trend move. We are still watching this very closely for confirmation. We want to make sure that we do get up and above the 20-day and that we hold above there. And some of these levels up here give us that confirmation. So it's a little ways for the NASDAQ before we get confirmation that the bulls are actually looking to move this thing back to the upside again. From a weekly standpoint, holding the 50 numerous times. I want to be watching that on a bear run this next week, and to the bull run, holding the 20 and holding below the 20 numerous times. So your bigger lines in the sand for the week are the 20 and the 50, as we've been trapped between them now for about the last month. SPX on a 60-minute also breaking up and over this blue line. So the Dow, the SPX above it, the NASDAQ is not. Let's see if the NASDAQ catches up. But the SPX is one that I see a lot of overhead resistance at. You know what I mean? Want to be very careful, and once again playing the same scenario of back up over the 200 period moving averages before you go looking for anything even remotely close to a long position. I would just be very careful with this. If you want to intraday trade this stuff, that's great. Make sure you're very aware of where these overhead resistance levels are at before you start doing that, though, because it wouldn't take but a hard hit of a 200 period moving average up here to turn this thing around and start it going to the downside again. So be very cautious. Make sure it clears these areas here before you start looking for any kind of a long trade. Don't get too happy to the bull side, and do not start thinking that we're quote unquote down too far that we have to bounce. That is a bad bias to have. Allow the charts to tell you what to do and when to do it. SPX on a weekly also holding above the 50 week. We had a break. We had 4 weeks ago, breakdown, hold by the end of the week. Breakdown, hold by the end of the week. Last week, breakdown, closed, but the bulls were like, nah, we're going to get this thing back up and above, and they did. So watching the 50 very closely. This area down here is the bigger line in the sand. We've seen some other markets hold this line very well, so no reason to think that the SPX won't do it as well. However, this could be a major break for the bear.